And so what we do is we have a 3-tier system where the revenues, like I said, it's typically over 2x what the regular lease would be, right? So the revenues first go toward the operating expenses, including the management fee. And then we have some sort of a rent hurdle, which is not a rent guarantee, but it's a next priority after OpEx. And then once that rent hurdle is met, then there's some sort of a profit split.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Farhan Abbasi is the CEO and founder of StayNue.com. That's STAYNUE.com. They specialize in vacation rentals. Farhan, welcome to the show.
Thank you, Sam. Great to be here.
Absolutely. The pleasure is mine, Farhan. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah, totally. You know, I spent 7 years at Ernst & Young as an accounting nerd. I left as a manager in CPA, serving Fortune 500 asset management firms like State Street, Charles Schwab, hedge funds, etc. And in my final year, I actually lived out of a suitcase, staying at 5-star hotels in New York, San Francisco, Kansas City, London. When I left the firm, I lived out of a backpack in youth hostels for a year. So I began to understand the spectrum of hospitality. And believe it or not, the most memorable times were not necessarily the ones in luxury, but in uniqueness of experience. And so that inspired me to launch StayNue.com, STAYNUE, which was my Boston trip at the time, with the mission of offering shared experiences and personal choice. So the growth of that business led me to launch my investment arm, Nue Holdings, and NueHoldings.com, where I partner with sponsors as co-GP to offer investors access to multifamily, single family, and of course, vacation rentals. We also dabble in early stage ventures using our own capital. But meanwhile, you know, Stay Nue continues to grow. We're entering new markets, and we deliver higher income and lower vacancies to owners and developers.
That's really cool. So let me get this right. There's two sides to Stay Nue. One is a management company. So it's where you guys go and third-party manage for other short-term rental owners. And then there's also where you guys buy and operate your own assets.
That's right. And on the investment side, it's typically co-GPing with developers, where we help in some way, advisory, due diligence, raising capital. On the management side, it's asset light, and we offer, you know, revenue share agreements, profit share agreements. Sometimes we do master leases. But the whole idea is to offer guaranteed or incremental income to owners, and with developers, it would be to shorten the lease up process.
What is explain that to me, because I'm not sure I completely understand. What is the missing piece, or what is the advantage that developers get by working alongside of you? And I'm going to tag onto that question as well. I'm assuming this is development specifically for a short-term rental?
It would be a multifamily asset. Typically, it's mixed use. It would be a residential property. And the idea is, you know, the future of living is not going to be one type of living. It's going to involve long-term leases. It's going to involve short-term leases, flexible stays, and elements of hospitality in different elements. I'm not saying a hotel condo, but I'm not saying a short-term rental only building either. But I think the future involves flexibility and choice, and that's what we should all look for, strive for. So in other words, you know, imagine a multifamily 200 unit where perhaps 10 or 5 or 20 of those units have some sort of flexible stay element where people can book for their relatives. You know, you don't necessarily always want your brother-in-law or sister-in-law to live in your apartment, but you know what? Hey, I'll book one for you just down the hall or whatnot. It's that type of thing. And yeah, I mean, I think that essentially answers, it kind of delivers an unmet demand, I think, in many neighborhoods around the world, around the country as well.
Absolutely. That'd be really great. You know, I can only imagine how great that would be, especially, and I'd imagine there's a certain class of apartment where that would work, or a multifamily property where that would work, where it's, hey, my brother-in-law's coming into town or their family's coming to town. Let's rent one of the furnished units. They can take that one for the weekend.
Right, right.
So tell me
Yeah,
how.
that was just one use case, right? You
Right.
have all kinds of other use cases as well, and you do have different, high end, low end type of options, as well.
Inside of
Depends
that.
on the
Very
developer.
cool. How when
Yeah.
you thought through this kind of idea, I guess living out of a suitcase, saying to yourself, okay, people are looking for experience, people are traveling differently, staying differently. How did you synthesize this into a cohesive business?
Right. Yeah. It all came down to the value to the different stakeholders, right? So with the guests, they want a flexible stay experience. They want cleanliness. They want kind of a good value. So depending on the market, with owners, they are looking for either guaranteed income or incremental income. And so you kind of put those two needs together and deliver a product that meets those needs. Of course, neighborhoods want a place that's safe, and calm and clean. So you kind of have measurements for not having parties and that sort of thing to kind of keep it clean. But yeah, I mean, it's really about finding those unmet needs and putting together a service. And yeah, we have over a decade of experience, doing this. We're top 10 in Boston, and we're ready to expand outside as well.
That's really cool. What would you say the future of your company is? Like where is your company and the industry as a whole going?
Yeah, totally. So, the industry is it's growing, first of all. There's a crazy statistic that I read someplace that said 70% of bookings around the world are still done offline. And what I mean by offline is that they're, perhaps, they're done by cash or check, or they show up and they swipe the card, but they're not booked on the website prior to arrival.
Wow.
And what that tells me, and by the way, that number is shrinking. It's shrunk a lot in the US, but I still speak to people that only take cash, or maybe they get mailed checks. Believe it or not, they still exist. So, that spells an opportunity for me to like modernize the industry. And I feel like we're at the forefront of that. What we're looking to do is enter into tier 1 and 2 markets across the country, and then the world. We have a plan to franchise. We're building that up as well. We want to offer entrepreneurs the opportunity to land and expand in their own markets anywhere in the world. And along the way, we plan to build some tech that would support all of the different stakeholders that I had mentioned, right? Creating a guest care, property care, client care for our property owners, and then spin off potentially to build a service for the vacation rental managers in the world.
Right. Wow. So you think, I mean, and not do you think, that there is just still an incredible amount of untapped potential in this
Oh
industry.
yeah, it's growing, and as asset classes around the world, or I guess in the U.S. especially, multifamily is kind of almost priced to perfection. I know there's a lot of shakeup going on right now, but perhaps there's opportunities in office and retail, but it's kind of like one of those uncertain environments. Vacation rentals, on the other hand, of course, it certainly has its impacts in terms of global recession, and the pandemic was a tough one. But generally speaking, it's for yield cheap chasers, right? If for people who are seeking yield and higher return with some capital protection, a reasonable level of it, it's a really good deal from a risk return perspective. So yeah, I think it's just compared to all the other asset classes, I think it's just a great one.
Oh, absolutely, absolutely. From a yield standpoint, it's been in the right places in the right markets. And I think you mentioned that. You said tier 1 and 2
Yeah.
markets. It's been I've got some friends in the business, and I personally am not in it, but we're doing very well. We're doing very well doing it. I think that's one of the cool parts about it. I was going to ask you, what was it? Well, I'm losing my train of thought here. I don't know. Let's jump to this one. Here's another one I had for you. You'd mentioned
Sure.
this early on your kind of the different types of leases that you guys write
Yeah, yeah,
with owners.
yeah, totally.
And there was a whole bunch of them that you mentioned there. How do you know which one is right for each particular situation? And can you explain
Yeah,
it?
man. Yeah, totally, Sam. So, you know, leases are higher risk, higher return. They also don't have the best rep in the industry. But, hotels have been doing it for the longest time. They take on master leases. There's a term called lease arbitrage, right? We typically look at leases as as a way to enter a market, and also opportunistically, where if the deal makes sense and the owner is not interested in sharing in that higher return, right? They just want to fill their units and get a guaranteed amount. Then we'll look at that as a way to, typically, I'm kind of open kimono right here. A good rule of thumb is if the revenue is about 2x or more of what the lease cost would be. So anyway, if you think about that, like, for the owners, we try to generate an incremental income of 10 to 30% or more by sharing the profits with them. But again, there's actually there's a hybrid. So we talked about a lease guarantee. We talked about a revenue share where they share in that upside. There's a third that we do. It's a bit of a private equity concept that we've incorporated into old world property management, which is waterfall. And so, as an investor, you know about it, but essentially what this meets the need for an owner that says, hey, I want some of the upside, but I also want some downside protection. And so what we do is we have a 3-tier system where the revenues, like I said, it's typically over 2x what the regular lease would be, right? So the revenues first go toward the operating expenses, including the management fee. And then we have some sort of a rent hurdle, which is not a rent guarantee, but it's a next priority after OpEx. And then once that rent hurdle is met, then there's some sort of a profit split.
That's really, really cool. I haven't heard of people employing that method yet. I think that's a lot of fun. How do you approach when you're going into a new market? Like, what are the steps you are taking to scale your company in a new market?
Yeah, it's like I said, we're looking at building a franchise system that'll really scale. I think right now we're in the expansion phase, where we are looking at, we're having conversations with developers that have a need to fill, 100, 200 units, and we can probably, reduce their lease up timeline in half by taking over a portion of their properties. That generates income right away, hits the ground running. We can actually set up a unit in about 2 to 4 weeks time frame, whereas typical developments look at a 1 or 2 year time frame to fill up. So as you can imagine, we can take over vacant units like with the snap of a finger, almost. So, those are the kind of conversations we're having now, with building communities, and also targeting individual owners that have 1 to 40 unit portfolios that also are looking for vacancy management, but perhaps they're interested in that waterfall that I mentioned, where they want some upside, they also want some downside protection. They own single family homes, condos, or small multis that are, duplex, triplex type of stuff.
So let me just get this right. You go to a developer and you say, hey, Mr. Developer, you've got a 200 unit property that you're developing. We can cut your lease up time in half. Right. And you do this by taking on how many of those 200 units? Like, how many of those do you take on and say, hey, we can turn these into short?
Yeah, that's right. The answer to that depends on the developer's appetite and the zoning, in that area, right? And by the way, this is not all short-term rentals. where, we're talking medium-term rentals, 1 month or more. We're talking co-living units where they're annual leases, but split up on a per room basis. We employ all of these strategies to ensure that the property gets its highest and best use. And I think that resonates with developers. And so when they hear that, they obviously have some questions. And from that conversation, we're able to kind of bring it down to how many units make sense. But I would say that it's typically part of the overall portfolio of a mixed use asset where first floor is retail, then you have like floors 2 to 5 being long-term rentals, of which we could take half a floor, for example. It could be a section, it could be sprinkled around. We're flexible on the way we enter into a building. It's really kind of a partnership, obviously, and we make sure that there's value for all parties.
Got it. That's really, really interesting. How do you go about locating or finding those developers that you want to work with? I mean, that's got to be a unique, probably imagine a unique conversation and a unique developer that is, willing to have these conversations with you.
Right. Yeah. So I would say that, I have two advantages. One is I'm part of the Harvard network, and I did an advanced real estate program there. I made 33 very close friends from my class, all of which who are very well connected to the developer networks around the world. I mean, some of these guys that I personally hang out with are building $100 million buildings on a per building basis. And then the second piece is that I involve my Nue Holdings, my private equity arm, is partnered with syndicators and GPs in these type of multifamily syndications. They're not necessarily developments, but they're also syndications that perhaps have a bit of they have a mandate to force higher income, right? And so as I form these partnerships, I'm able to involve StayNew.com as an option as part of their business plan.
Got it. I love that. Let's talk about this. What's one of the biggest challenges maybe you have faced in either scaling your company or that you guys are facing right now, and how do you plan on overcoming it?
Yeah, I love this question. I would say it's to balance the multiple stakeholders' needs, right? So we flex properties to its highest and best use. We have to deliver above market income to our property owner, clients, and investors. We also have to provide a flexible stay experience to our guests and residents. And then, of course, our neighbors, we join them to make sure that the communities are safe, calm, and clean. And then finally, I have to offer growth opportunities to our global staff around the world. So it's like walking a tightrope to ensure value for all stakeholders, right? But when done right, the view is great.
That's really, really cool. Yeah, it's funny. Who was it? Somebody came on the show a long time ago, and they said it's not when you scale or when you grow your company that the problems go away. They just change. And so, it sounds like for you, it's just the iterations of your company and going, okay, now we've got to take care of everyone involved in this picture.
Yeah.
And that's maybe something earlier on that you didn't have to deal or handle or even think about at that point. So that's very, very cool. Thanks for taking the time to share that. If somebody wanted to follow in your footsteps, what would be some of the things that you would tell them to do now?
Yeah, totally. So I remember having two pieces of similar advice like this, where one was it was from someone I admired, but I didn't like the advice. And then the opposite, there's somebody who I didn't like and I didn't admire, but looking back, man, I love the advice. And so here we go. The good advice was to invest in yourself. You have 30,000 in savings, invest in yourself. You have 40 hours of time, invest in yourself. You have a cucumber in the fridge, eat it, and then invest in yourself. Launch a business. Say it with me. Invest in yourself, right? But then the worst advice, by the way, was just don't take risks in your 20s. Be heads down, make moves in your 30s. But as an entrepreneur, I have to disagree with that advice, right? So I would say, long-winded Sam, like my advice is to don't listen to advice and just fucking do it, right? And question who you admire, and try everything you desire. And if you have the time, then make it rhyme.
Got it, man. I absolutely love it. Farhan, this has been absolutely enlightening. I love the way you guys are tackling this. It's a unique approach, I think, to the space. We've had lots of people come on and talk about short-term rentals, and they get pretty kind of streamlined into doing just that. But you found a way to scale your management company, to scale the types of assets that you're turning into short-term rentals. I think that's one of the coolest parts about this conversation, is that it's not just the single-family home with 6 bedrooms in the Smoky Mountains, and this is what we do. Not that there's anything wrong with that, but you've got a unique product, I think, that you're bringing to the market, and a unique way of tackling some other people's issues. And I think that's one of the things that some people, maybe if you're listening to this, like, find a way to tackle somebody else's problem. I think you've done that here for the developers and made it a real win-win. So that's very, very cool. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, well, first of all, I appreciate all those thoughts, man. That was amazing, Sam. To join our effort, first of all, like, as a property owner or developer, my email is Farhan, Farhan @staynue.com, STAYNUE. And if you're interested in any, we're looking for salespeople as well. If you're interested in joining our growing global workforce, email talent@Nue Holdings, NUEholdings.com. And if you have any questions at all, any clarifications to the audience, I'd love to be of service. If you're looking to start your own business, keep in touch and look out for us, because we're looking to find, deliver ways to help as well.
That's awesome. Farhan, thank you for coming on the show today. I certainly appreciate it.
Awesome. Thank you, Sam. Cheers.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.